Assalamu alaikum, and welcome to this exclusive interview on Islam Channel with none other than the renowned investor Adam Ebrahim. Adam is the Chief Executive Officer and the Chief Investment Officer of the OASIS Group, a leading asset management firm founded in 1997 with over $4 billion in assets under management across a range of asset classes, including Sharia-compliant equity, property, and income funds. Adam, welcome, and thank you for being with us today.
It's a great pleasure, Mohammed. And, we go back a very long way, and it's great to be sitting across the table or across the chair with you and having this conversation.
Absolutely. And I'd like to congratulate you as well on recently winning the Best Islamic Fund Manager of the Year 2025 at the Global Islamic Finance Awards in Kuala Lumpur. It's well deserved.
Thank you. It's a team effort and a brand effort. So to the team and the brand and all our stakeholders, importantly our clients, our regulators, and all our partners, thank you for all the support.
Absolutely. I must say that I had the privilege of my first professional experience being at OASIS some 15 years ago at your headquarters in Cape Town. And that really left a lasting impression for me as a young, ambitious Muslim just before starting university, to see a world-class organization founded and led by Muslims that was true to our ethical principles and values. So thank you for that opportunity.
It was great to, for you to spend time with us in Cape Town. And it's been fantastic to see your career grow through university and then your working career and now back at Islam Channel and leading the business, giving your father some space so that he could exercise his entrepreneurial flair.
Absolutely.
And inshallah, it's a great journey for you, and it has been a great journey. And we remember those days fondly.
Alhamdulillah. I mean, that opened doors for me to do investment banking at JP Morgan and Credit Suisse after, and then work in private equity at Canada's National Pension Fund. And I was one of the very few Muslims in those environments. And I think you've played that role for so many other people to come in and get that training and be able to work in different financial institutions around the world.
Yeah, alhamdulillah, the Almighty has given us the ability to share, not only to share what we do on a daily basis with our clients and our team, but for our community. And two things, the people unable to look after themselves, those people that we don't leave them behind, we leave no one behind, and those people who are coming into a working career with us, and also hopefully we can facilitate those people who may be in different career paths like yourself. And, we can look back that by contributing and creating this environment, this OASIS, this brand, we have created something very, very special for our community.
Definitely. And a lot of people are familiar with OASIS today, well-established financial institution, billions under management, and the successful firm that you've built. But I find it's really helpful sometimes to learn about the early days of the journey. It'd be great to hear about, your professional career, your experiences, what led you to found OASIS in the first instance, and maybe some of those stories in the early years.
Sure. The journey actually goes back many, many years for the career as, doing my accounting studies and then completing my accounting professional exam. And then in South Africa and Cape Town, then I had the experience of spending 18 months in London. A long time ago, in 1986, that was the introduction of what was called Big Bang, the introduction of the then Financial Service Act of 1986. And I was part of the team that implemented that operationally. And that was a great experience. And in 1986, being part of this experience, part of watching the euphoria of financial markets, and I was on the outside looking in, and then and monitoring and implementing the regulatory framework that we have today, the beginning of the regulatory framework that we have today in the UK. And then, interestingly enough, the 19th of October, was a stormy weekend, and it was a stormy day on financial markets. A Friday the 19th and the Monday, financial markets, I think, went down 19% in one day. And you see the euphoria turn into depression. And that was actually very interesting to watch that. And from both an outside and inside point of view, I was part of the team then that went in to go and salvage some of the stockbroking firms from going insolvent in 1987. And so, having been part of the team that implemented the Financial Service Act of 1986, and then be part of the team that actually rescued financial institutions in 1987 post. So it was a fantastic experience. When I returned to South Africa, I knew where my career needed to be. And so in financial services, in wealth management, in asset management, and that's where I started my career in 1988 in Cape Town. And then I became a partner in a very large asset manager and managed 40% of their assets. And then in 1996, I decided with my family that we would start OASIS, and that happened in 1997. And one of the objectives of starting OASIS was, we had two journeys. The one journey was to go on my own, run a small business, and just have a good life. And then I realized that that's not the journey, because that would be a very selfish journey. And the journey was to take the skills and the entrepreneurial flair that we had and Almighty has given us, and to share that and to build. And that's where the OASIS journey came about. And when we looked at the environment, Muslims generally were excluded because of the belief of not participating in activities like riba, and not participating in activities, all the prohibited activities. So that meant to a large extent, Muslims were excluded from the wealth management space. And two things happened. Exclusion meant when you have high inflation, your real wealth diminishes very quickly. And so Muslims' real wealth was diminishing very, very quickly. Those were the people that followed a very strict, and that was a very big percentage. They excluded themselves because they didn't want to be contaminated. Then those people who participated in workplace pensions, they belonged to a pension fund, and they took halal income, and they, the hard work, the remuneration, and every month they contributed to a pension, and that pension was invested in all the prohibited activities. And then finally, when they retired, on retirement, and it's happened globally, nearly 100% of their retirement income. So they started their career 100% halal income, and by the time they migrated that through the working career by saving incorrectly or imprudently or not having it available, they then turned that into haram income. And on retirement, 100%. And we said we needed to solve that. And that's what the OASIS journey in 1997, 1998. To do that, we had to say then, how do we bring this into the Western regulatory framework, the G20 framework? And how do we go and take the Islamic framework and the G20 framework under IOSCO and the Islamic framework that comes out of the Organization of Islamic Countries and the Fiqh Academy within that, and all the regulated entities that come out of there. And we said, we want to build a global brand way early before, we were just scrolling, but we had ambition. And we said we needed to take this solution globally. So we needed global standards, a global regulation, and global compliance. And so we then got registered with all these regulatory entities. We were, even though we were not, the International Financial the Islamic Financial Service Board, which is country regulators, we became an associate member, even though we were a private sector business. So that, and we contributed, and that allowed us to take the Islamic rules and regulations and incorporate it into the Western rules and regulation, so that we could offer to all people in. Effective the ambition was in the G20 countries, and because that was the frame of Muslim minority countries, and it's with the benefit of hindsight, we were able to do that in South Africa, going into Ireland, and in the UK we did it change the rules de facto for the EU, and not only the regulatory rules but the tax rules. And importantly, the incidental non-permissible income, never before in the history of any Western financial service sector was any amount being allowed to be taken out for cleansing for any reason. We managed to get the regulators in South Africa, Ireland, and in the UK. And then when we read through an exemption, when we re-domiciled into the UK in 2019, the funds 2019, 2020, 2021, the FCA gave us an exemption. And in last year's budget, they didn't mention our names, but they said there's a company who's perfected this cleansing, and then it's now part of the UK regulatory framework, not as an exemption. So sorry, that's a long answer, but it's been an exciting answer, journey, and where Muslims have been given an opportunity to be part of the wealth creating and wealth protection, that is available to all citizens in all the countries that we operate. And, I've just been to a country like the UK and South Africa, where Muslims are minority, 3, 5, 7% of the population. And in South Africa, we must probably have the most complete product range of any country, anywhere in the world, with the most competitors. And in the UK, that journey is well entrenched. And we're way ahead of many countries where Muslims are majority. So we must thank and be thankful to the Almighty. We must be thankful to our clients and all the people supported, but also the regulators who allowed us to show through education, through entrepreneurial flair, through diligence and compliance, that what we bring as Muslims is very in tune to what everybody needs.
I think that's an amazing example of how a pioneering firm can turn problems and challenges that we face as a community and win over the regulators, as you mentioned. Sometimes I think in our community we feel that we can't necessarily challenge the status quo, especially in cases where it's leading to our exclusion. So I think that's a really, really important story to highlight. And for people out there, whatever industry they're in, to think about, how can we push the boundaries to ensure that inclusion is there. So thank you for that. One of the key reasons, as you mentioned, that OASIS was founded was to empower Muslims to achieve their financial goals without compromising their faith. And by virtue of having been around for almost 30 years now, you've seen it all. You've seen the boom markets, you've seen the downturns, you've been through the Great Recession of 08, 09. And if we look at the economic conditions today, I think it's fair to say that it feels like it's a tough environment. Growth, especially from a UK perspective, is subdued. Inflation has been very high. It's coming down, but it still feels like it's persistently high. Why is it important today for people to invest?
So remember, the higher inflation, the more volatile the environment is, you need to protect your wealth and you need to protect your assets. Otherwise, inflation every year, if there's 5% inflation, your purchasing power decreases by 5%. And you compound that over 5 years, you're down to 5 years, most probably 75, 80%. So whatever the pound was worth today, you're only going to be effectively be able to buy 75p of product. Yeah. And assuming that you're an average person and that pound was buying you the basic necessities, that means just because of inflation, and if you're not protected, you will not be able to buy the necessities, and there'll be a gap, a 25%, roughly 20 to 25% gap in the provision of your necessities. And so it's essential that we look at this environment and we say, you know what, Islam and Muslims is for all people, for all times, and it's inclusive. It's not an exclusive process. And so right here now, the UK really needs, and every country that has, it's not only the UK, many countries have a cost of living and inflation issue. If we bring back to the UK, so if you look at the UK, the economy has been sluggish since the financial crisis. If you look at all the headlines, taxes are very high. Taxes are now 40% plus of GDP. Now, that is similar to the kind of very sluggish times of the 1970s, early 80s, where taxes were at a similar level. They went down to as low as 30% of GDP, 31% of GDP. And that means, where 69% of the economy could be used to expand and not spend on taxes. Now it's 41. So 60% of society's wealth can be spent for themselves, and 40% to fund the state and the social welfare system. So that's an issue. And the net result of this, you've now pushed taxes to the most extreme they've been, and you look at headlines. Many of your entrepreneurs, your millionaires, your wealthy people are emigrating to lower tax countries. And the UK is most probably, with China, most probably got the highest level of wealthy entrepreneurs emigrating. And they're the most important people to get us the economic, because they're the people who are entrepreneurial, they're the people prepared to take risks, they're the people who create jobs, they're the people who create, so that's the one element. The second element is that most G7 countries are facing, the UK most probably is better position, an aging population. So more and more people have to live off the state and the welfare system, and less people are contributing to taxes and the welfare system. So this situation actually gets worse over time rather than better. And so you need, it's a structural headwind, and governments at this point in time, if you just look at France, they're not able to have a sustained budget. They're not able to have a sustainable government, because just they cannot match their funds. So various states, and you look forward over the next 5-10 years, your demographic is going to make the situation worse. Government expenditure at 44% of GDP is too high. But government deficits, budget deficits, is income relatively, so expenditure just over 5%. Cumulatively after, it means that it's just too high, and means that debt levels are spiraling. So the solution that is raise taxes, but then your entrepreneurs leave. You need to find a solution where you can get economic growth up. And I'm going to do a few controversial suggestions. Now, I'm not a politician, so, these things will be difficult to do. So take it from where it comes. But this is necessary to do. Unless you get to a situation where we were back, where you get hyperinflation. And remember, in the 70s, the UK had to be rescued by the IMF. And we're almost getting, and we don't want to get there. And so we need to take serious decisions. And one of those, how do we get economic growth up? Easy, in my opinion, but difficult. Yeah, right? Easy from an armchair, difficult from if you're a leader. And the first thing is, you tell people no more work from home. Everybody go back to the office. That means the office is occupied, the coffee shops are working, and that ecosystem could add 0.5% to GDP growth.
Wow, just from a return to office mandate.
Hundreds of thousands of jobs, right? You try and get hold of, there's this 3 days a week in the office and 2 days at home. The 2 days is Monday and Friday. Try and get hold of somebody on a Monday and Friday. Zero chance, and so the productivity, if we get the productivity up, and we then also look at other things where, now this is even more controversial, but we need to do it because we're in a crisis situation, and unless we solve it and we be bold, you got to get more young people working. So you've got to actually make the social welfare system slightly tighter for those people who can work, have got skills, or who are able to get skills if they don't have. And so they're saying, oh, that job is not good for me. I want something better. But that may not be available. The job B may be available, maybe paying 90% of job A or 95% of job A, and the person will sit out of the economic system because they're not prepared to take job B. Now imagine you tweak that a little bit. The person takes job B, gets 95%, and it goes off the social welfare system.
An incentive to work hard and for people to be productive, ultimately.
That's the only way we're going to do it. We can solve it. It's all within, rather than having suddenly somebody say that, we don't have the money, we're going to have to shop, and we're going to, that would be the situation. So we both positive and cautious about the UK economic conditions. The UK, however, has got many positives. It's an attractive place. It's almost in the center, not quite at the center of the financial world. And so if you look at just the neighborhood that we're in this, just walk outside, it's the most global cosmopolitan environment you're going to get. And the shop right next door to us is most probably the leading global shop around the world. There's no shop around the world. I'm calling it a shop. It's a big,
Harrods.
Yes.
Yeah.
I don't think and it attracts people. So just give you an idea that there's so many positives, and we have to leverage, take the tougher decisions, leverage all the positives. If you look at like foreign investors in the UK, you've got some of the biggest sovereign wealth funds, like the Norwegians, the Middle East sovereign wealth funds, the Singaporean sovereign wealth funds are looking at the UK as a very, very, very attractive, and especially places like London, very, very attractive place to invest. So most countries don't have that. So you've got to yes, this is the difficult situation. We've got we've got a lot of positives. Let's reinforce the positive and take the tough decisions. And I think you could get the UK into being a thriving economic situation where people feel happy and feel prosperous and feel energized.
Yeah. Let's hope some of the politicians listen to your suggestions and that we're able to take some action on those
people
points.
To implement.
Yeah, absolutely. Adam, one of the advantages you have sitting at the top of a global asset management firm operating in geographies all over the world, and importantly in different asset classes. One thing I want to ask you is, how should your typical family thinking about investing be thinking about different asset classes, whether it's equities or property or income? What's your outlook for?
Sure. So what I'd like to just is take a step back and say that it is better for you to be in a multi-asset fund, okay, rather than asset classes. So at OASIS, we have 3 multi-asset funds: the medium equity, low equity, and a variable equity, which is the variable equity is a UK-focused fund. And what that allows the fund manager you to do is get a mix of assets. And the way that the way that taxes work, if you had to do the assets selection yourself, every time you want to make a change, you'd be paying capital gains tax at that point. Okay, and so if you made a mistake, or or you want to change the world, then this capital, your incidence of capital, your incidence of taxes will be much higher. And very often the individual will be following the headlines. Stock markets are up or stock markets are crashing. If stock markets are up, they're already high. That's the wrong time to put more money into the stock market. And when they're crashing, they're really low. It's a good time to be putting. So it's counter as professionals, we're doing that. So you're getting 2 things by going into a multi-asset fund. So we'll talk about that in a second. You're getting the maximum tax efficiency. You're getting the maximum operational efficiency, and you're getting the best. So I'm spending all my time looking at this. I'm not looking at the media. I'm not being reactive. You're going from a reactive to a proactive situation. So multi-asset funds for an individual is where you should place your money, and not definitely. So global multi-assets. Definitely not in, the country specific, or that's my opinion, or or sector specific, technology, etc. You can do that in a multi-asset fund. You get all the efficiencies. So the difference between, if you're a young person, the recommendation, so under 40, under 45, 50, you should go into a high inflation protection, high risk profile multi-asset fund. So the medium equity, so equity will be 55 or 60 or 65 plus property. Those are inflation edge assets. Then the balance, maybe 30, 40% would be in income. Because you've got a long-term time horizon and you've got to protect against inflation. As you reach retirement age or at retirement age, you've now stopped saving and contributing to your retirement or your savings. You're now living off your savings. So you still have a long life expectancy, so you still need inflation protection. And so the best thing to do is to go into a low equity. So equity maximum 40% and maybe another 5 or 6%, 8% in property. So 52% will be in income, lower volatility, more safer, more predictable income. And that's how I would structure it. And then as a young person, so or for anybody, there's the UK and many countries have tax-free savings. They are a unique product, because it's the only product that the HMRC and other tax authorities are saying all the income and all the capital gains is tax-free. So yet people are not utilizing it. There's a maximum that you can put. There's an annual maximum and a lifetime maximum. So if you have a child, the first thing you should do is give them a tax-free saving. And the first gift you should give your nephew and niece, besides your children, is a tax-free saving. Get them onto that tax-free saving. That means the compounding effect of returns over the long term will give them the most a significant tax-free account in a world where governments are taking as much taxes. So this is a unique opportunity.
Definitely. You mentioned about the stock markets being at record highs. I think one of the key drivers of that is the AI boom. And if you follow financial news, it seems to be what the topic of the day. And some people are calling it an AI bubble. What is your view on this? Does it feel to you like we're in a bubble?
So AI, used to be called machine learning before. It used to be called automation. That's now called AI. And in between, you add artificial, virtual reality, and and so artificial intelligence will have a role to play, and will have a significant role to play, and will add a lot of value, and it will be quite revolutionary. But in fact, it will be evolutionary. So but it's speeding up the evolution, and not all use cases will be monetized. So people will not be able to make money out of all things. So, for example, I'm just going to digress for one second. The Chinese in automation and autonomous driving are virtually giving the software away as part of the motor vehicle cost, rather than adding an additional cost. So they're giving that as a free utility. So if the motor vehicle costs £50,000, it still costs £50,000, but now you're getting the autonomous driving, etc. Now there's big business models of motor vehicle companies that have been built up that they say, okay, the motor vehicle is going to cost £50,000, and we're going to charge £100 a month for you to use autonomous driving, right? That £100 a month, and that's, so there's massive value being placed on that. The Chinese are giving it away for free. So that £100 a month and compounding and putting 50p's on that, it's worth nothing. Now, the same effect, so you're starting to see companies, recently, companies writing off and impairing some of their investment. The next thing that we must be careful of, the companies are investing in themselves. So Microsoft is investing in OpenAI to produce product for Microsoft. And because OpenAI doesn't have the money, NVIDIA is investing in OpenAI so they can buy NVIDIA products.
Vendor financing, circular
Well, it's a circular.
Yeah.
Now, what happens, and it's hundreds of billions of dollars and pounds going into this circular economy, and it looks like a virtuous circle at the moment. But, what happens if this kind of high road scenario doesn't work out? If it's just the middle road scenario, there's a massive potential impairment write-off that will happen. I'm going to take another example. COVID time, you had this massive movement online, and people started extrapolating that online would do that. Online has actually it's continued to grow, but at a slower pace. So it's much bigger than it was 10 years ago, but at a slow pace. But the whole ecosystem and the whole values have taken that it's going to grow exponentially. So taking it to AI, this exponential growth, most probably is unrealistic. The hundreds and hundreds of billions going into CapEx, some of that will be written off. And people will then say, you know what, instead of this company being valued at a 50 PE, it should only be valued on a 20 PE.
And that's a big drop in valuation if you're
I'm not predicting it, but I'm saying there's a high probability. And therefore, in our funds, we have a low exposure to that. And we've diversified our funds by, gold shares have been a great alternative because it's a great risk diversifier. And gold is an asset without being a liability of another person. It's very seldom that and so there's many other countries, companies and sectors that are attractively priced. So I think you could still invest and create a lot of value, but I think if you Johnny come lately, as they say, going into AI, I think you're more likely to be burnt than creating a lot of value.
Oh, that's very helpful. Adam, I want to touch a little bit about the purpose of OASIS and the mission of OASIS above and beyond, helping investors and clients achieve their financial goals. So as we know from Islam Channel, OASIS has been a key partner of ours in so many important initiatives, giving back to the community and helping the community to develop, whether that's the business awards that we organize that you've been a part of since the beginning, or the Global Peace and Unity Festival that we organize. And of course, in South Africa, you do amazing work in education, in healthcare, in social development, in disaster relief. Why is that so important to OASIS?
So what we're trying to do, we're trying to create an environment, a more equal environment. We're trying to create, and if you have a more equal environment, you have a low risk environment. And investments thrive in low risk. And secondly, if you have a more equal environment and we can support each other through mutual benefit, and some of those benefits may not be immediate pounds and pennies. The benefit may be that an event is successful, a community is successful, an initiative is successful. So one of the areas that we spend a lot of our effort is on early childhood development. So by investing in that early childhood development program, hopefully you can change the trajectory for that individual and the family from now till the end of time. So that there's very, very few opportunities where you can change a trajectory and you can make people their lives and their livelihoods better, and society a happier place. And one of the, let's start off as Muslims, we have to not pay, we have to distribute our zakah. Okay? Now, the more we do in raising the value of our investments, we're raising the zakatable amount. And zakah has a unique position in the equalization, inequality of society and the human being. And then the more value that we have, hopefully through our we can tell people, be generous. And if the generosity comes, the contribution to charities, the contribution to the individuals, the contribution, how good is it if you can take a young person and assist them through university, and they come out as a professional not having any debt? These are all initiatives that we work on. And then, so we go through from the kind of early childhood all the way to the old age homes. And we take people on outings, the orphanages on outings, we take them to the beach, we take them to the theater, give them opportunities and give them social bonding that they wouldn't have in a normal situation. So it's all part of making society happier, making society a better place. And the more we can participate and partner, like, those events, means that organizations doing these events have a greater chance of being successful. Partners in business who are going ahead and starting an initiative, and they know that maybe you'd support them, that takes away risk, and it enhances the probability of success. So it's a virtuous circle that we're trying to create. And in doing so, if we can make society a lot fairer, more equal, more prosperous, more happy, and that's really all, and we can sit back one day and say, Alhamdulillah.
Alhamdulillah. It's really powerful to have that investor's mindset when it comes to philanthropic initiatives and charitable giving and community development as well. I want to close off, Adam, by asking you, as we're approaching the year end now and people are thinking ahead to 2026, what are your closing wishes for individuals and families in the UK, around the world, beyond in 2026?
So I think we have, good health, family, are the foundations of who we are and our religion and our society and our communities. And we've got a lot to be happy about, to be thankful about, a lot to be, to look forward to the future. And I would like people to be optimistic and generous and positive. And remember, with difficulty comes ease. So as difficult the environment is, there will be ease. And if we believe that places us in a completely different mindset. So 2026, remember that no matter how difficult the environment, it's going to get better. And be positive, be supportive. There's lots of people behind you. From an OASIS point of view, 2026 is a very dynamic year. So let's look at it, besides a focus on performance, etc. In the UK, we've put in a lot of distribution. Hopefully, we'll be able to get into the major workplace pension, the large group workplace pensions. That is really important to us. And if we do that, then we almost close the ecosystem, barring one. And again, 2026 will deal with that. And this will be more global. And so the UK, in the Middle East, growing our footprint, again, the distribution, the products, there's scope for more our products to be brought into the retail space in a more dynamic way. The regulations have toughened up and made it. So it's really great for us to go and build on this huge opportunity in the Middle East. And, so 2026 is delivering on that. 2026 in South Africa, again, our wealth management footprint. We've got a beautiful property business. We've started the dynamics in South Africa and Cape Town property is exceptional. So we are on a path to develop and redevelop some of the properties. So we've got a 5-7 year plan to triple our property exposure. We don't have to buy anything. It's so we have a huge tract of land next to Cape Town Airport. We've held for a long time. Now it's time to build it out because demand. We sat on it. It didn't bother us, right? It just increased in value. Everybody wanted us to subsidize, and we waited till the demand supply fundamentals And now the demand supply fundamentals are where we wanted to be, and now we're ready to expand. So going into logistics, going into retail, going into residential. So that's a great opportunity. But the real thing, what we don't have at the moment, is the ability for our investors to be able to go onto the website or onto the internet or onto their mobile device and try to transact with us. Inshallah, with all the effort we've done, a huge amount in our back office, getting us ready. Inshallah, by June next year, we'll be able to deliver that. Then we would have completed our ecosystem. And from a client point of, from society point of view, from a client point of view and an OASIS point of view, we think 2026 and beyond, and 2027 will be our 30th anniversary. Inshallah, we can look back and say, Alhamdulillah, like we say every day.
Alhamdulillah.
And we, inshallah, it's going to be a great and prosperous future.
Inshallah. Mr. Adam Ebrahim, thank you for your time. And on that positive note, I'd like to thank you for your valuable insights and your time today.
Muhammad, it's so good chatting to you, and your dad must be incredibly proud of you. I remember he came to visit us on the 1st of April, 2010.
Yes.
And we met him on a day that was incredibly important to us, because we launched a whole range of new products. And we launched our insurance company on that day. And we still had time to meet your dad.
Alhamdulillah.
So alhamdulillah, I always remember that. And all of those developments in 2010 was exceptional. So he brought lots of barakah into our lives.
Alhamdulillah, I'm sure he's grateful for that. And it's been a wonderful partnership and friendship for all those years. Alhamdulillah. Thank you.
Thank you so much.
Thank you.